Good morning, everyone. It's Mary Jane Morris. I'm the Riverside County broker for Allison James Estates and Homes. I am here today to talk to you about your Tuesday tip of the week. I am speaking to you from Temecula, where it is pouring rain here, and it has been all night. Of course, our thoughts go out to any of the fire victims up north that this rain's not going to be a good thing for, but for here, it's a nice thing. I wanted to wish everybody a Happy New Year, and then I would like to talk about the last time I was on, we had the pleasure of having Justin Lonson from RC Energy Solutions on, and we talked about the PACE loans and the assessments, you know, when they put in solar or windows, air conditioning, that sort of thing, and tie it to the property taxes. So we talked about that a little bit, and then almost immediately after we finished that class, HUD made an announcement, and it happened right in the Christmas season. So I didn't jump on right then, but I knew it was important to get out to you right away. So some of you may have heard that, and I'm going to refer to my notes a little bit here. Just it's a short piece. On December 7th, the Department of Housing and Urban Development reversed its previous decision, and they announced that they would stop insuring FHA and VA mortgages that include property assessed clean energy or the PACE loans, HERO loans as well. That new policy goes into effect after 30 days, which was thereabouts January 7th. We talked about this a little bit. I did, besides the education that we did last time. I told you that there was some trouble coming because the assessments, the property taxes, are the only thing that are ahead of a first mortgage. And when you put something ahead of a first mortgage, it is a big deal, both to the lender and to your ability to pay off or eliminate that once you've done it. So the quote directly, and I've just got two quotes I want to read you directly from FHA. FHA can no longer tolerate putting taxpayers at risk by allowing obligations like these to be placed ahead of the mortgage itself in the event of the default. And HUD Secretary Ben Carson went on to say, assessments such as these are potentially dangerous and may have serious consequences on a consumer's ability to repay their first mortgage. Or when they attempt to refinance their mortgage or sell their home. We've known this was coming for some time. The moment PACE loans and HERO loans came out, most lenders were out teaching about it, that there was going to be some of these issues, and we've seen them. We've seen it over and over again, that these mortgages, because they're effectively mortgages, I'm sorry, but these liens are causing. I just helped one of our agents close a deal where there was a $54,000 one. So that is a significant thing to take over. They are not going to allow any transfers anymore, and there will be no more subordination agreements. So the only way out on these is to pay them off. Now, as you know, through negotiations, you could split that. You could 80-10 it, 90-10, 50-50, whatever you're able to negotiate with the buyer and seller, but it will have to be paid off now. It cannot subordinate, and if for new loans, it cannot even be on the title report. It must be paid off. The last little quote I wanted to read you here was the new guidance states that FHA is concerned about the potential for increased losses due to the priority lien status given to such assessments in the case of a default. FHA is also concerned with the lack of consumer protections associated with the PACE assessment, which are far less comprehensive than traditional mortgage financing. And we know this because our sellers don't even know what they bought. They may have paid off a lease and think they own the system, and they don't, because it was a lease or the energy agreement, a management agreement. So we know that the sellers don't understand that that is a lease and that they do not own the system. So we've seen the mass confusion that goes on with it, as compared to even in the old days, we had good faith in truth and lending statements, but with TRID rules, we're even tighter than before. So obviously, the client needs to make an informed decision, and if they can't do that, then there is there's a risk, and the amount of money that are being placed on these properties is significant. FHA said they would continue to monitor it, and if more action was needed, they would get to it. But for now, you need to know that if you have a listing with a solar on it, a lease on it, it will need to be paid off. It will not continue. So that was the big news that I wanted to share with you today. And you can see my number in the background, and you know how to reach me for those. My email is there as well. We got a great question last time. I'm going to move on just for one moment. We got a great question from the audience last time that I got after we closed up the session, and I want to answer it now. I believe it was Rosie Andrews from Riverside County that asked, but it may not have been. The question was, what's the best way to buy a solar, or that sort of thing, of all the programs that were available? What is the best one? And I called Justin again this morning and made sure my answer was correct. So this is what he says. He said, frankly, a personal loan is probably your best option, meaning straight up your great credit. You buy the system. You do not lease it. You do not do an energy agreement. I asked him about equity lines and seconds, and he said sometimes they have rates, short-term rates, that wouldn't cover the length of the solar system. So I guess there are some concerns there. He also had some benefits to share about when you privately finance. He said, I thought these 4 things were very useful. He said, 1, you own the system. You do own the system, and you can transfer it. He said, you also own the federal tax credit, which is 30%, or dollar for dollar every dollar you spent. So if you spent, my math's bad here, but you know, $6,000, $8,000, $10,000 might come back to you in the tax credit that would reduce the price of the solar across the board. If you then deduct, you know, 1, 2, 3, 5 years worth of use at roughly $200 a month, that's another value that you can see that you're getting toward the payoff of that mortgage. And then, of course, the one benefit that we all have from solar and from these window benefits and the ACs and all the things they put in is that it's an additional selling feature. And of course, people want these things. Solar is certainly a way we should be looking, but and I'm sure that's why FHA and HUD allowed them in the first place, was so that we could take advantage of those types of things. But it was a slippery slope to start with, and it's not better now. So I just need you guys to know that yes, cash. Jessica, I see your question here, and basically cash and buy your system out. So I'm going to teach again soon about, I'm going to send out an information form that you need to use when you're taking a listing, so that the seller can give you better information, and we can catch those leases that people think of they're our own. Another tip that is, do not put in the MLS and in the TDS that it is a fully paid off system if it's not. Luckily we weren't on that side of the transaction, but I did watch a very painful experience by the listing agent and the co-listing agent as they tried to explain why all the documents said a fully paid off system. We did not discover it was not until the buyer was signing loan docs, so it was kind of a big deal. It probably cost us 10 extra days, and the seller had to buy the system. So it finished paying off the system, so it was a big deal. So I wanted to ask your question. I wanted to answer that question because it was such a good question from the last session. That about wraps up what I'm going to talk about this morning. I do want to remind you, for those, whether you're local or not, Mondays with MJ starts again on the January 22nd. I'm going to launch those Facebook Live this year. And the first class will be a walkthrough of Allison James University, which we could all use all the time. That's just, there's too many good things on there, and we need you to have all the benefits that you get from working with us. So we're very grateful to have you with us today, and keep in mind that this has already begun. You will not be able to fund a loan that's already even in process if the solar's there. So you might want to give some thought to what deals you already have in place. We appreciate you. We think you're important. And if you need me or any of the brokers from California or our corporate office, we're here for you. Feel free to dial away. I hope you guys have a great day. Be safe out there in the rain, and I'll see you soon. Thanks.